with us Nilesh Jain, Head Derivative and Technical Research, Centrum Broking. Nilesh, good afternoon. Thank you so much for giving your time to ET Now. Yes, there was a news flow. Market did see a knee-jerk reaction, did see a smart recovery, and at the end, it was a volatile close. What's your view on the market next?
Very good afternoon to you, Mansi. Absolutely. So today we had monthly of an expiry for the Nifty and Bank Nifty. On the back of that, a lot of volatility was seen. At one point of time, Nifty was making an attempt to break 24,900 level decisively. But towards the closing hour, we have seen a sharp profit taking, due to which that the Nifty unable to sustain above that particular level and slipped below 24,800 mark. So looking at the overall setup, looks like we are likely to witness consolidation to continue in the range of 24,500 to 25,000, where 25,000 is acting as a steady wall and looks very unlikely to be taken off on immediate basis. Now, looking at the overall setup from a positional perspective, till the time Nifty doesn't break below 24,500, we can expect a sort of a range bound session to continue from here. The volatility index in the weeks which remains sideways, although today we have seen some bit of spike of 2.5%, but at 11.50, nothing much to worry on that front as of now. Now coming to Bank Nifty, we did see some bit of profit taking in the Bank Nifty as well, but overall on the closing basis, it managed to end near about 56,000 mark. So that is a make or break level from here, and if unable to sustain above the same, then we can expect further slide to continue towards 55,500 to 55,000 as well. But as of now, any pullback and a decisive breakout above 56,000 will attract a short covering rally from here. So it is important to watch out for tomorrow, where we'll be getting a weekly close as well, and the rollover data, the exact number we'll be getting. So on the back of that, it is important to see which side will it break both Nifty and Bank Nifty tomorrow.
Okay, so that's the view coming in on both Nifty and Bank Nifty. But Nilesh, the only sector which was spared from the kind of fall that we saw in the market was FMCG sector, and a whole host of companies. HUL, after it reported its numbers, was up 4.5%. We had Godrej Consumer Products, Dabur, all of them ending with some amount of gains. What will your thoughts be on the entire sector, and any stock-specific ideas from the FMCG index?
Absolutely, Asisha. So FMCG basket, in fact, today we have seen a good spurt in this particular space. After a spurt, it has ended exactly at its 200-day moving average, that is placed at 55,650. So it managed to end above the same. So looking at the overall setup, the FMCG space being a defensive in nature, looking at the market volatility, the focus is again shifting toward defensive. So we can expect a follow-up move to continue in Nifty FMCG basket. And on the upside, as far as Nifty FMCG index is concerned, 56,500 to 57,000 kind of levels we are expecting. So within this space, we have a couple of buy recommendations. First of all, Dabur is looking strong on the chart, and we are expecting a follow-up move to continue towards 545 to 551 on immediate basis. With a stop loss below 520, Dabur can be added. And apart from that, United Spirit, again from a consumption space, this particular stock, after a lot of decline that we have seen in the recent time, today it has witnessed a spurt and a strong rebound from the lower level. So we can expect a follow-up move to continue towards 1380 to 1400 on the upside, with a stop loss below 1300. Again, United Spirit can be bought. And lastly, HUL, we have seen a very good close in HUL. It is on the verge of a multi-month, multi-year breakout, I would say, which is placed at 2550. So a breakout about 2550 will open upside towards 2600 to 2700. With a stop loss below 2460, HUL can also be added.
All right, Nilesh, thank you so much for your stock-specific recommendation as well as your view on the indices and market. Thank you. Have a nice day.
Thank you, Mansi.
Moving ahead and